Three numbers before the open. Korea's Financial Supervisory Service just issued a formal warning over exaggerated ETF marketing. Domestic active ETFs grew eightfold this year, and corporate bond issuance is replacing bank loans as the go-to funding tool for big business. It's Tuesday, July 14th. Here's what investors are watching in Korea today. Regulators flagged a wave of ETF ads promising outsized returns without matching risk disclosure. Meanwhile, passive index funds are underperforming relative to newer active strategies. Corporate treasurers are shifting toward bond markets as banks tighten lending standards. Here's what the numbers show. The FSS issued a formal warning to Lee Chan-jin and other asset managers over ETF marketing practices, citing misleading return claims. Korea's active ETF market grew to 310 products worth 106.49 trillion won, $76.8 billion in 2026, up from just 38 products in 2022. New ETF listings alone hit 499 filings year-to-date, already surpassing last year's total. Corporate bond issuance by large enterprises rose to 36.6 trillion won, $26.4 billion this year, a 20% increase, while bank loan reliance fell. Time magazine named Naver's Cheese in the Trap webtoon adaptation among its top 100 entertainment picks for 2026. Hong Kong's Global X ETF provider expanded its retail lineup with new semiconductor and healthcare products. So what does this mean for retail and institutional investors tracking Korea? Earlier, we flagged the FSS warning. That signals closer scrutiny of ETF products marketed on return promises alone. The eightfold jump in active ETF assets shows capital rotating away from passive index tracking faster than regulators can monitor. Watch for tighter disclosure rules on active ETF marketing before the next filing cycle. That's today's AI Prism, Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won IFRA award-winning series. We'll be back tomorrow.